Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Morning, everyone. Let's turn the music off. Let's get into it. Hey, g'day. Hope you're well, wherever you're tuning in from this morning. Another Wealth Coffee Chats, 23rd of July, Wednesday. Apologies for last week, team. I was actually with our team, doing some training, doing some learning, trying to get better, make sure we continue to keep you guys safe and help you grow your wealth, help you hold your real estate for longer. So that's what we were doing last week, but we are back at it this morning. Getting used to the buttons again, I'm sure. But hey, listen, if you're here for the first time, welcome along. If you haven't met me before, my name is Cass Shosted. Here representing the Property Management Group. We host Wealth Coffee Chats on a Wednesday. So like I say, great to be back with you all. If you know my story a little bit, I've been doing this 14 years now, I think it is. Is it 14 years? Might be a bit longer. I can't even remember now. That's how quick it's gone, or long it's gone. I'm not sure. We'll see. But yeah, look, team, I think over that time, when you do this for a decade plus in your chosen profession, you certainly find some things that works for you, works for your clients, certainly from a process and workflow and strategy perspective. And that's what we try to do here on a Wednesday, and I'm sure with the other 6-star team as well. So thanks for joining in. Luke, good morning to you, mate. Hope you're well. Justin as well. Great to chat the other day. And Winnie, welcome along. Hello to you as well. So great to see you guys here. Listen, how I love to roll on a Wednesday is the more you guys chat in the chat, comment in the chat, and a bit of banter and some questions and some conversations, the better I go. So please help me help you, because this morning I had a little bit of a conversation to share, a bit of a story to share. Because if you're confused and unsure about what rents are doing, team, I need you to watch this. I need you to listen. I've got some data, I've got some statistics that have come out for the June quarter, the month of June as well, from Domain and a few other research groups out there to share with you guys. Now, nothing's necessarily surprising in this data, I wouldn't think, given the conversation we've been having for probably 2 years plus now in regards to vacancy rates and where rents are going and the market growth that most people across the capital cities have had. However, really interesting. I've got a partner and I in the market today. We've got a property which is a little bit older. It has been renovated about 10, 12 years ago, but it's in a building that is, let's say 1970s, 1980s build. And we're going through a process at the moment to sell that property, take some of that capital, pay some PPR debt down, and then recycle that into a investment property, hopefully in an A-grade suburb, et cetera, et cetera. You get the drill, part of the strategy. And what's interesting, we launched the property last week. and a lot of conversation, right? Like how many inquiries we're going to get, what's the market doing? I haven't been to a sale open home for a few months now, and it was a bit interesting. So the property went on the market, and on the fourth day we held, the agent had an open home, and leading up to that, the inquiry was kind of a little bit low. We weren't too sure where things were going, and all of a sudden, Saturday at 11 o'clock, a dozen groups come through the open home, which was fantastic. Out of those 12 groups, we received 3 offers. And of those 3 offers that's going through the process now of being under contract, there is such a significant increase or gap there between. So the offers was kind of interesting. I was kind of listening to and trying to understand the psychology between what people were offering, what the comparable sales were doing to what the market was saying, what, the situation of the buyer. And we've been talking about downsizers and their influence or their want to, downsize effectively. And that's exactly what this 2-bedroom apartment is. They're coming from a house, they've sold this, coming to a 2-bedroom home. And what's significant for that is that they're coming in here with, a lot more capital per se than your first home buyers, things like that. So I found that really interesting. We received some strong investment interest as well. So it was kind of interesting to see where that played out. And then I was looking into, okay, well, how does that relate to the Brisbane market in a sense? And I found here since June report from Domain saying, Brisbane dwelling median values for Brisbane, 926,000, just over 926,000. I mean, a house in Brisbane now, just over $1 million, right? So the $1 million is the new norm, team, up here in Vegas, as they say. Month to date, 0.7% growth for median values up here in Brisbane dwellings, 2% for the quarter, 7% for the year. So there's still continued strong interest, demand, opportunity up here in the Brisbane and Southeast corridor belt, if you like, sand belt, if you like. Just to highlight a couple others, Sydney, 0.6 for the month, 1.1% growth for the quarter, 1.3% for the year to date. Melbourne, which I think is somewhere I will be looking to very shortly, 0.5% month to date growth for the month of June, and then 1.1% over the quarter, quite stagnant through the year. So, the Melbourne market is starting to show signs of some green shoots there for growth from a capital sense. Median dwelling value now in Melbourne, just under 800,000. So look, some opportunity there. Just thought I'd share that with you, just with a live example of what's happening out there in the public world for open homes, because if you've got a 2-bedroom apartment in Brisbane, I can tell you what, it will not last long. So that worked out for me in that respect. Rental market, team, rental market. So what I want to get from you guys in the chat, if you want to know, and we'll do this live, is if you've got a property anywhere in the country, doesn't matter. I'm going to share my screen. We're going to live look at suburb rental growth. So I've written down a couple of examples of where you guys have purchased, like if you've got house and land packages in Queensland, so Polara, Morayfield, Burpengary, let's have a look at that. Maybe you've got an apartment down in Melbourne, in Flemington, Footscray. Maybe you've got an off the plan deal in Hyatt, Hampton East. I want to show you guys what the data is saying over the last 12 months and long-term rent growth as well. I think that'll just give everyone some clarity, some confidence to, realize and hopefully from my perspective, understand that, there are opportunities for growth. It's certainly rents are going to provide a stable and reliable cash flow into the future. So if you've got a property and you want to know what your rent growth is doing in your suburb, please pop it in the chat now because we're going to talk about that, and I can highlight that live here today, which is good. Because overall, team, rental growth market, of course, we say that growth is easing due to affordability caps. At the end of the day, a lot of the tenants' budgets are kind of reaching that ceiling now, and that's obviously pulling back property managers and landlords like yourself, investors, to obviously continue to increase that rent at the moment. So, it's more an affordability cap than a winter low at the moment. I wrote down here as well, first time since 2019, combined capital house rents remain stable for 4 consecutive months. So that was interesting, as well as the rents for capital units. That's remained steady. The pace of growth continues to cool. Again, still trajecting upwards, but like I say, it's an affordability thing. We're seeing tenants today sort of switch their demand to smaller, cheaper, more affordable dwellings from a budgeting perspective there. So that's an interesting trend we're sort of seeing there. What's also interesting across the capital cities, except Melbourne, except Melbourne, rents on units, or that growth there is actually outpacing the house growth. And again, that's that trend from tenants from affordability switching their wants and needs to more affordable dwellings, and that's why you can see the demand for units is certainly peaking. Now, I say but Melbourne, but I tell you what, talk to me in 6 months. I reckon we'll change our tune. Vacancy rates sub 2% across all capital cities. We know that, and less than 1% in cities like Perth, Adelaide, Brisbane, which we already know. And I also made a note there, investment lending is up year on year. So really interesting times. So I'm going to share my screen if this works. Team, if you've got a suburb, investment property in a suburb, you want to know about the rent growth, pop it in the chat now for me. It'll be a great time to do that. Otherwise, I'm going to just pick a couple examples and show you guys here. So now hopefully you guys can see this screen. Maybe put a yes in the chat if you can. That'd be fantastic. But what I really want to share with you, let's go down to Victoria, because this is where I think there is great affordability at the moment. I mean, I think we saw a report the other day, Melbourne for the first time in a long while has got actually a positive effect on people moving back to Melbourne, which is interesting. But, hey, a couple of years ago, some people bought a property off the plan in a suburb called Flemington. And what was interesting at that time was obviously there's some development, there's some construction, there's a volume of stock that settles in year one. But what this is showing now, year on year, there's just over nearly 4.5% growth, almost 25% rent growth for the 5-year period. So really interesting numbers there. So sometimes we feel things aren't moving, things are stagnant. When you look at the data from this perspective, it's showing a growth rate. Let's have a look at another one. We've got many clients out in around the Footscray, West Melbourne kind of area there. For the suburb of Footscray there, really interesting as well for a unit, just over $510 year on year, another 6.3% growth. A huge uplift since what's that, 5 years, 2020, COVID, right? Don't forget the Melbourne market obviously went through a bit of a lag there for a period of time through COVID. So some really interesting statistics there. If anyone's got suburb, pop it in the chat for me. One another. Now, if you've got an off the plan deal coming up, maybe you purchased it 12, 18, 24 months ago down in Hyatt, which I'm hoping to see in a couple of weeks. What's it doing there? I mean, Hyatt's a smaller suburb, a lot more owner occupiers in and around that sort of precinct, but hey, there's still 2.8% growth year to date, year on year, which is fantastic. And again, a huge uplift when it comes to the 5-year growth. So this is all supplied by Domain team. You can jump on Google, go to Domain, find the rental report for June, done by Dr. Nicola Powell, and you'll find this sort of stuff. If I go across to Queensland, let's have a look here. Houses. We've got a number of clients in Polara. Polara's been a success story. I remember when Polara was farmland and we were leasing brand new property for like sub $400 a week. That's what was happening in Polara. Today, median rents there $690, another 6.2% growth year on year, which is really interesting. And 50% growth over a 5-year period. So team, we were saying this back in 2022, CBRE put out a report and we said, hey, over the next 5 years to 2027, we're going to have on average 27% rent growth across the capital cities there. So that was interesting. It's playing out in front of our eyes. That's Polara. Hey, maybe you're looking to buy a house and land package in Burpengary East, if I can spell correctly. Hang on. Type the wrong letter. Burpengary East. Let's go Burpengary. There you go there. So, North Harbour, these sort of new developed precincts, communities, fantastic sort of gateway back to Brisbane, not too far at all. Average rent there, median rent $600 per week, 3.4%. So you get the drill. Basically, I think, team, what's going on here? Let's play around with my screen a little bit. Let's see if that works. That's not going to work, is it? There I am. I'm back. So team, effectively, if you're not sure where the rents are, I encourage you guys, I might put that link in the chat or have a look at that. You can really dissect where rents are at year on year, see what that 5-year growth plan is. I know a number of clients who, sat on the fence, didn't sort of take any action, probably kicking themselves a little bit. So don't let that be you. Let's get involved, get amongst the game, talk to your coach and certainly get yourself a property because, I think, look, from my perspective, we're seeing some really good, stable growth Like I say, I think it said here, for the first time since 2019, combined capital house rents remain stable for the 4 consecutive quarters. That gives us a lot of time to plan. But, there's some reliable cash flow coming through. There's still great tenants out in the marketplace. If you're looking to upgrade your investment properties from, a B grade to an A grade, like I'm sort of doing at the minute, you can be confident in that marketplace because, not even 7 days on market and it's under contract and for a healthy price, which is great. So, just wanted to share some information, team, share the resources with you guys. Go to Domain, check out that June rental report. Certainly give you some confidence and some clarity if you're looking to purchase or you're looking to just upgrade your portfolio numbers, then that would be a good place to start on top of, things like SQM research. So that's me, Wednesday, 23rd July, 8:27. I am ahead of time, which is fantastic. But listen, team, if you got any other subs you want me to check out, drop it in the chat and we'll talk about it. But certainly, hey, listen, if you're around and you haven't already registered and you want to register, I'm not sure if it's still open, but hey, there's pop-up mentoring for Positive Collective Group down in Sydney. And Brisbane, I'll be there tonight. Jason is hosting. So listen, if you're coming down to wherever the location is in the email and the text down in Brisbane or Sydney, look forward to seeing you guys there. Hope you have a good night. But in the meantime, team, that's done and dusted for Wealth Coffee Chat. So thanks for playing Fallout, team. Thanks for joining. We'll see you again. Don't forget, 8:10 tomorrow. Wealth Coffee Chat's financial planning team will be on to take you through the next lesson in our world. All right. Catch you later, guys.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.